Hello and welcome. This information, if you find it a little difficult to understand, all I can say is to try your best. For those whom do understand this, just be holy shit, this is very profitable and not that difficult to do. And well, the chances that this strategy works for profits is about the same as the chances of water freezing as temperatures fall below 40 degrees Fahrenheit to below 30, or from above freezing to below. Artificial intelligence in this tells when, where, and for how much to trade. And when I say it's like pretty much guaranteed, that's assuming you are successful in picking two coins of which neither one of them get their asses destroyed, basically. To do this, I mean, the math on this is, I think, late high school, early level college math. It's at an intermediate level. It's not basic, but it's not really advanced either. The artificial intelligence is your calculator or your spreadsheet. It's not like it's, oh, anything magnificent. It's just really simple math. And for this strategy, no BTC are needed. I mean, originally, let's assume you want to play this and you like two coins. We'll just call them A, B, C, and X, Y, Z. And you buy a Bitcoin worth. What you would do is you would put half of your funds in one, half your funds in the other. You'll never need to hold Bitcoins again within the strategy. And it's another one where you don't even need to have a single one on the exchange. You can leave them all on the hardware wallets, which is something I do recommend within this strategy. So let's get started. Let's start off by showing an example of what you're trying to accomplish. Let's assume back on April 30th, 2017, you wanted to play both DGB and extra bytes. This will be a little hard to do because you need two exchanges. Because you'd have to probably trade XBY, whichever ones were available at this time, which were at least two available, moving into three different ones. Which again is why if you can do two on the same exchange, it makes it much easier. Because you're going to be buying and selling at the same time. But this would be the ownership of how many you would have. You're buying one for the other. So that's why when one goes up, the other goes down. The start we can see for the orange line representing DGB was a little under was 100,000. And the blue line, the XBY, would start off at 125. The ratio was 1.25 when it started. And thus the amount of ownership always stayed above that line from row 9 on. So at this point, you would have significantly increased your holdings in only 4 months' time. The first trade would have been basically period number 3. So there was 15 different times where you transferred one for the other. And after 43 trades, spanning a little over 14 months, the ownership of the DGB at one point would have been 1.7 million, falling down to 225,000, and the XBY would have raised up to 775. And when one coin goes up, you sell it. Another coin goes down, you pretty much buy it. And again, all of the times when you buy, where, how much, that's all mathematically calculated within math. And how I calculated it here was I use 1% net rake, meaning if I was to make a trade and the computer says, okay, sell 50,172, blah, blah, blah. Okay, how much should I get back without rake? Okay, I'll take 99% of that instead. Kind of deal. That's how I did it. And the rake is going to be better than that because you have to do two trades. So if you're doing 0.25%, it becomes a half. So what I did is sell with at least a 40% gain on the ratio. Can't be under, has to be at least. You check once a day. So it's whatever the closes were in this case, because at that time, that's like 7, 8 o'clock Eastern time. And the sell amounts, well, they're defined by 0.9 p.m. of the holdings. Yeah, simple math. Sorta. And within it, this is the calculations, although it's missing the 0.9 math, which I'll go over. PM is equal to percentage gain divided by 100 plus PCT. And it's also multiplied 0.9. That's something I didn't do on here. And you can choose 0.94, 0.96. I'll explain why I'm doing that at the end. So the price goes from 1301 in the ratio to 21.78. So the percentage gain is equal to the differential of these two numbers, which is 8.7, divided by the number where it came from, 13.08, and then that equals 66.5. So we add 100 to that number. 66, and we divide it, that's 35.9. But what I want to do with this number is reduce it for basically safety purposes. Sometimes when you do the math, you might work out and then it sets up that you oversell a little bit. It ensures that you don't oversell. That's really the simple reason towards it. But it shouldn't be much slower than this. And even 0.93, 0.95 might be better. But this works, however. They all work. So what you have to determine is what type of percentage gain do you want. And for long-term trading, I really do recommend a decent high percentage, 40, 50, 60%, 70, but definitely in there, definitely at least 35 or 40. You can definitely play 10, 20, whichever ones you go. The lower you go, the more you're going to trade, but the less you make per trade. When you make one trade for a 40% rise, then you get a pullback, you need several trades at 5, 10% moves to get the gain you're going to get this way. So I definitely recommend to go for 40, 50, 60% on price gains. So as far as getting started, I got 12 steps. Step number 1, you put fields in the spreadsheet to enter the prices. Then you calculate the ratios, enter field for last trade, and calculate future orders. I have done every step on the spreadsheet, but I'm going to go over the first 4 within the one that I have made. And therefore the price is up in the upper left corner. This would be where you would manually enter the two prices of one coin and the other. And you would use that so that you could have a ratio given to you, which is these two rows. So ABC / XYZ, you have both ratios to go through, which is probably pretty good to do it because you're basically working on a sell on each one when each one goes higher, because when one goes up, the other has to go down. When you're doing one divided the other. Because everything in this is just letting the math play as it is, sort of like I was mentioning that weather example. This is like the law of physics is another way, the law of math. So this is a simple division math, this number divided by that. And this is this number divided by that, or 1 divided by that. And you have the ratio. This is the next column that I created, or set, where I have an arrow on C6. Just want to make sure you can see the columns. C6, we have an arrow. And that's just to say this is where you're putting the number in. So assuming 516,814 is where you last traded or where you started off with, both are the same. This is where you go next. One crosses the other. And how is this calculated? It's this multiply the percent, 1 point, your percentage. So if you want 50%, 1.5. If you want 20%, you multiply by 1, 2. I got 1.4. 40% moves. So you manually would enter this number in. It's a manual entry. This one, it just takes the invert of that number. And then exactly the same thing here, multiplying this by 1.4. So then let's take a look next at number 5, the column fields for the trade ledgers, which is the date, ownership, buys and sells. If you have to buy coins now, you're going to do it. And the reason why is because you're going to have to put how much you own on there, so you might as well buy what you need now. And again, half on each coin if you're buying. And then you insert inventory top for top row. Copy and paste inventory formula for several rows, and let's go ahead and show how that is done. So here we have date, inventory for each of the two. So assuming you bought in, this is what you would buy. And I got this all the way down to row 300. And in such, right in here, I can always see my inventory by putting in here, well, equals B300. And this is equals C300. So I have the inventory placed right there. Now this is where the computer is going to tell me how much to sell. And again, you have to manually put the price in, and then it will tell you. So how does it calculate this? Well, let's show. Let's start off within this row here where it says S90 calculation. And it really doesn't do the 90 calc, it actually does it here, but either way, you're just making sure you do the formulas as I was mentioning before. G5 minus D5. Well, what's G5? Well, that's the number you would put in. So assuming, let's assume a situation happens where, say this market rallies big. It has a big, nice pump, 1688. And this one even had a small fall. So now the ratio has changed to 785, which is greater than that number, which means it's time to make a trade. Okay. So within this, it says -1, but that will change. What we take is G6, which is the sell amount. So sell price, well, we can see it's 785. So I would manually put that in. And that number changes to 0.518, and it's giving me the amount to sell. So G6, which is 785, subtract the last trade number. So differential, finding out what the gain is, dividing it by the number, so now I got the percentage gain. So in here, I take the percentage gain divided by the percentage gain plus 1. So that would be 1.5189 at this time. I multiply it by 0.09. So that's where that calculation comes in, just to sell 90% of what I consider the maximum sell within this formula. And then how much do we own? Well, the inventory is up here at E2, because this is for XYZ. And that would be 2,880. So you would know, okay, say if you're working with a hardware wallet, you would transfer, say, 2,880. So what I can do on here, I know I'm going to be selling XYZ. So this is where I would go. There's no formulas in here because this is always going to be manual entry in these 4 lines. So therefore, it's just, I'm going to put the negatives in here, 2880. And we can see that XYZ inventories went down, because the math calculation for this is relatively simple. It's this number plus this number plus this number. All cells are going to be a negative anyway, so it will reduce it as we've seen in here. Now, interesting, what's going to happen is you're going to wait X amount of time, however fast the coins take to transfer. Another reason why I like DGB, because they have fast transfer times. Especially from your hardware wallet, you can select it to go fast in like 6, 7 minutes. It can arrive. It's so sweet. But not throwing that part aside right now. That could mean that the price goes up higher, and it might change things a bit. Another reason why I like the 90%. So therefore, what we do in here is we now buy ABC. So what would happen is you'd go on the exchange, you would sell this on for Bitcoin, and then you would get Bitcoin. Now, how much would we get? Well, we can calculate that with a calculator. We're selling 2880. The price is 1688 Satoshi. I'm going to do decimals. When it's 4 zeros before it. It's 8 subtract how many digits it is for the zeros before it. So let's go 1688. So that would be 0.048 Bitcoin. And then we would multiply that by some rate. So 0.9975 will do. Okay. The other coin is 215. So we take this number, we divide it by its price. Dot 5 zeros, 215. 1, 2, 3, 4, 5. And that's how many we should get. But we're going to pay rake again. We'll go 0.9975. And what you would do is say on the exchange, this is what you, and let's even do this. Let's subtract two of them. Why did I do that? Well, maybe that's what you have to pay to get them off the exchange, because you're going to be putting this to your hardware wallet. There we go. Now there's 70,000 of these. So therefore, what do we do next? Well, we just made a new trade. We did so at 785. So now our trade is 1099 up, or 0.178 on that one. Let's assume the next day, well, you hit the top. Well, you didn't hit the top, but you hit near it, we'll say. Say it got up to 1749 or whatever, even 18, but then it pulled back 1511. And this is holding at 223, small gain. Well, this has already went down, so basically you sold 785, and the price of the stock, if you will, because it's exactly how it's acting as we're playing it, down to 6 7/9, or over 1 unit down, over 50, about 14%. This one, well, it's up now, but it's not above this number. But let's assume that this just hangs in there because it's already had the game, and it's holding a good area, 1529, but this had a tremendous day. It had one of those, oh my goodness, you see it's pumping. It was 310, but it's still going. And it's even 315 when you're ready to make the trade, because, well, obviously, if it's at 0.206 and that was 0.1784, it's time to make a trade. Okay, so what are we trading at? Well, 0.206. I guess we got to sell 24,366 of ABC. So we'll go minus 24,366. I will just say this was a week later. And we'll do the exact same thing here. So now in the spot in this, we will take 24, which 24,366 here, and multiply it by its price, which has went up to 315. And that's 0.0767, but a little less. Not that less. Okay, so now we're going to buy the coin at 1529. So we'll divide that by 1, 2, 3, 4. And it'd be about 5,007. Again, let's just say cost 1 to take it off the exchange. And of course, there was a little bit of a fee as well. So let's just say that's what you end up getting, all things said and done. Because what you're going to put in here is, when it's all said and done, is how many coins you end up pretty much taking to your wallet. And you don't have to use the hardware wallets, but I definitely recommend it. Okay, so now we have the situation where you ended up buying 22,000 of these coins, selling a little more than you bought, but you got a lot more of these XYZs. So again, we're going to change this. Now, I can design it so that you write in which one and the computer can determine which one you write into, but again, that's how you decide to make yours. But I could easily just quickly do something like, okay, so, well, actually I got the ratio right here. So it's 0.20. That makes sense. So now again, we're waiting for it to go to 6.8 or greater than 0.288. So this pulls back a bit to 44. And then this has a stellar gain, a decent gain, 1622. Not quite there yet. So no. But you wait a few hours. Maybe this has another pullback, 233. This one doesn't have as much of one. Oh. Now you got a trade. It could be easily the next day sometimes. So therefore, we can type in 6.957 here. We're going to be selling that of 3,123. And that would give us 0.50. We'll divide that by the price at 233, 1, 2, 3, 4, 3, 4, 5. Multiply that by 9975. We'll subtract a couple. Copy that number. Place it in here. Numbers get updated. That's sweet. And there we have it. It's another winning play. And then you just keep on moving on within such. And when you get tremendous gains, it just becomes so phenomenal. And let's just hypothetically assume that one does it first and the other does it second. And this is just a dream situation. Let's assume this one goes up first. 1626, so it just marginally goes up. And you have one of those days, 479. And they can do that in 24 hours. That's the sick part. But before I do that, I should type in here what the last trade was. And that would have been 6.957. Okay. So let's just do even 1605 for that matter. 496. Oh, even higher than that. Let's go 588. So this thing just crushes this number. Like, it just demolishes it. But that's what these things can do. You've seen some of the coins that just have these wild moves. So now you were supposed to sell at 0.201, yet you're looking at 0.366. That's an amount of 37,301 you're selling of ABC. That's you own 68,000. You're selling more than half of what you own. When gains happen like this and you're looking to try to get maximum gains, that's what you're doing. And this would mean a lot on the Bitcoin scale. 37,301. 1, 2, 3, 4, 5. 21.9%, or point, yeah, still 20 that. Divide that by the XYZ price of 1605. 1, 2, 3, 4. Multiply 9975. And let's subtract 1 as well. No, that's multiply. Oh, multiply 1's the same. Subtract 1. Okay, cool. And there we have it. And let's just assume this was April Fool's Day. And then the very next, well, no, not the next day, we'll go 3 days later. This thing went up, but it held its gain pretty good. I mean, pretty good. 495. But now this thing had a great move. Let's just assume it pretty much has doubled. Even higher, 34.46. And wait a second, I did that again. Where? Or did I put my last 6957? No, it was 0. Yeah, it was 0.366 number. So yeah, the last trade would be 2.7295. That's what I needed to do. Okay. In real time, of course, you only do it like you shouldn't make that mistake or forget to do that. Okay, so again, this thing cools down. Let's even go 455. This thing pumps up to 41.95, we'll say. That would just be extreme. But you know what? That's what it is. So therefore, now this would be telling me to sell. Let's just go to the number 921. You know, I'm going to do a little lower than that. But I know this is realistic to do that. Even higher is realistic. It's 8.3. So I'd be selling 13,260 of the 21,953 that I owned. When extreme moves like this happen, that's just how it gets played. Let the math do what the math does. And again, we'd be dealing with a very large number. You're selling 13,260 at this 37 number. 1, 2, 3, 4. That's going to be close to a half a Bitcoin. A little under it after the rake. And the price is 455 on the other side. And we'll subtract a couple again. And there we do. It's just a big move. And then the next day we have your standard price comes back as that was an OMG move. Well, first we'll put last trade in because I always forget to do that. And we traded at 8.3. Okay, so let's just assume this is pretty much this goes down to 450. And this goes to 3022. So therefore, not as big enough of a pullback yet. A few days later, this one's not doing it, not well that is, and this one's having an okay rally. Now we have 16.8, but it's 16.5. You wait a bit and it goes up again, and 29. Oh, excuse me, that one's supposed to go down. 28, 11, 477, and well, there we have it. Now it's over it. Let's put the point. It's a minimum bet. Now we just see what a big one looks like, and that was pretty big, but 36,685 that we'd be selling of ABC. And it could even be the same day at sometimes. It's well, whatever, as if that matters for this mathematical purpose. But we have a sell amount of 36,685. Now we can see we owe 140,000 up top, so we're going to be a little over 100 when it's done. Funny how this isn't that big of an amount, yet it matches the previous time we sold that coin because your ownership was so huge after this buy. And that's 36,685. And that's which coin is that? It's being sold, ABC, so that's 477. 1, 2, 3, 4, 5. So 17.49, again the rake. Divide the price of 28.11. And again the rake. So 61.93 we're getting. Still a portion, just a small portion, like half of what you did, but that's because the volatility was much lower. But after having just a few buybacks here and there, and you can get multiple ones in a row, you can see these numbers go way up and down, but that's the whole purpose of it. It's like a game, and this is the mathematics within it. And looking back at the things to do, I'm not good at number 11, formatting cells, but when you're dealing with big numbers, you might need that thousands indicator or the comma indicator, and I'm going to put that in. So I'm going to go format cells, and maybe you only want to see 2 decimals, and you want to see the thousand separator. There we go. And so we know we started off with 48,000 of these ABCs, and that number just after a few trades would have better than doubled to 104,000. And the XYZs, which started off a little south of 10,000, is now a little south of 15,000. So that's a gain of about better than 50%. I mean, that's like how you do amazing moves. But again, I actually intentionally, of course, put spectacular moves. And if you just grind your way using the 1.4, 42, 57, 59, 63% gains, which are the normal, you're going to do fantastic. And the higher percentage you do, the less trades you're going to do. But if, say, you're doing 1.6 or 60%, after doing one sell and one buyback, the amount of trades you have to do at like 10% to match that is not enormous, but a decent amount, though. Which is why, to me, it's just unless you are really good at this and you want to do this at high volume and you know how to do this short term, really that would be the only way. And now I want to go onto another subject of this, because one thing you can calculate too that I haven't done in this is how many of the coins you have, multiply its Bitcoin price, add the two together, and that's your Bitcoin portfolio. And your Bitcoin portfolio is going to be up and down. You're going to see it's going to overperform the collective of the two. You're going to have some good runs, and then stuff like this is going to happen. And over the course of the past few years, when the market's topped at 2018, there's a good chance that your portfolio's done what we've seen here, where it went down. This is, I don't think you need to do this, but this is another measure in playing this game. When your BTC portfolio gets high, then what you want to do is sell some of those two coins for Bitcoin, leave them as such, and then if you're right and stuff like this happens, you can buy them back and even get more coins. That's something else you can do. I don't think that's important, especially not any type of hedging or project and goal fulfillment purposes. What do I mean by that? Well, that's one of your portfolios. But when you got your Bitcoin portfolio, what's its value in fiat currency? And that's the one that's very, very important for when you notice that times get really good. And an example is when 2017 came to a conclusion, and for most of that year, these coins were going way up. And to me, I think what's important is to take some of those coins and put ways of using it or taking them out of cryptos, turning it into cash and anything associated with that, well, just precious metals and so on and so forth. Any type of things that you really look in, I mean, that's cash, but any type of things like real estate, boats, tractors, I mean, whatever, is the time to do it when these things go really high. And then in here, you might not want to take as much of your cryptos out for these types of things because of the decline, but you realize you play the time out. Markets go up for X period of times, they go down X period of duration, down or sideways for a Y period of duration, and so on and so forth, that you know after a down move something like this is always going to happen. And when you get a sustained one like this, you'll do the same thing again and turn it into, and this could be even a way of like, okay, I'm a precious metals fan and I want to turn this into I want to get silver or gold, both, each one, whatever. Okay, well, now what you can do is just like start with the Bitcoin, buy your 2 coins, and when you get situations where your fiat dollar value is climbing, that's when you can sell it for Bitcoin. Maybe your coins can directly buy it. Maybe one of your coins is Litecoin, and you directly use maybe X amount of Litecoin and silver and or gold's coming in the mail. And the amount of precious metals you can accumulate in this game with this, with just even small investments like $500 to $1,000, can be just spectacular. Let alone even 100 or 200, they can. I mean, it might be take some more time, or you might need some more fortunate coins. But 2 coins, the coins I'd be looking for, at least one of them, but if not both of them, are the ones that can have spectacular up and down moves. And that's just going to increase your volatility of trade so that you can really outperform the market. And with that, it is now time to conclude this production. This is, to me, a amazing, amazing trading strategy. Stock markets, albeit a little smaller volatility, that's definitely in play. You could do this, of course, in cryptos. It's you get the better volatility, the better movements when you see, oh, 112% for the day or for the week. Oh, it went up 4 to 5 times over the last 6 weeks. Those types of situations, and yeah, and then you have the moves where one coin goes up before the other. I'll show you an example. Well, I'm not going to show you. I'll explain to you. In December of 2017, Litecoin first went down before its up move, maybe losing 20-30% down against Bitcoin. And then in the span of a day or two, it tripled, if not quadded, but 3 to 4x move. It was a unique move, meaning it's not because the entire crypto markets were going up. And if they were only going up to small degrees. And thus they were pretty much outperforming almost every other class out there. And that meant in trading such, LTC was going up. That means you were looking to sell for, say, a 35% move. You were noticing, OMG, I'm selling for a 77% move or a 100% move. And that will happen. So you make that big trade. And then what happened after that, because Litecoin had a big gain, it was unable to accelerate higher. So it got to this level, came from here, we'll say, and then it just chopped around into a whatever percent volatile move. And after that, that's when all the other coins collectively went up, but Litecoin was exhausted to the point where it just stayed stable. But so that meant when these other coins were going up and DGB was doing a 2, 3, 4x move, or however much it may have been, it meant aggressive selling of DGB for accumulation of Litecoin, which you just sold during this great peak. And thus the profits in that you would be making would be spectacular. And after all that was said and done, that means the value of your cryptos was going up because Bitcoin was going to 9, 10, 12, 15, 16,000, while other coins were holding in there going up as well in their value. So now you're like, oh my goodness, it's worth a lot, and you would have a lot of the coins. And that's when you'd be like, okay, I started off with, say, let me just delete everything on the screen. But if you had a situation where you started off with, say, 200 of one, and it was one was 5 times higher, and it was 1,000, and you had all those moves, a couple dozen or 3 trades, and next thing you know, one of these is worth spectacularly higher. Say this one is worth 1,000, or even like 700, and this one's worth like 1,400. Well, you've just spectacularly done amazing. Well, now you can figure out, okay, what ratio can I go? I could bring this down in half even, where the prices were so high, and go 350 and 700. Sell half of what you own on both of it, or equal amounts again. And it could be like maybe 20%. You take off 140 here and 280 on this one, or however it goes. And then you just keep on trading the ratio that you would lowly would require. But in this case, you'd say, okay, I got, well, let's even do that for, second one I said. So you're at 714. So let's take off 20%. 140 on that would be 560. So plus 460 from where you started. And you'd have to take off 280 from here. So that'd be 1120, which is still more than you started. And then you get that BTC that you sold it for. You would then take that amount and see how much it's worth in dollar terms. And of course, you're playing this on the silver game, and let's just assume it was worth 28.85, we'll say, in dollars. So now you know how much your bill is. Make it a $2,600, $2,700, $2,800 bill, and off you go. You keep playing the game, because it really is all about the game and how you play it. That's a song, that reference I like using, from a professional wrestler, Triple H, who had the song, it's all about the game and how you play it. It's all about control, and if you can take it, I am the game I want to play. The lyrics to me are just, I like them based on what I consider this is the game and being in control. And the reason why Advantage Gamblers, as it's called, not the poker industry, for games like that, and games like the sports gambling, the slots, and I'm kidding on that because to me that's not. Definitely this one. When you can find the mathematical edge, understand the laws of physics, the laws of math, then it becomes very profitable. And the more creative you get in understanding things and advanced you can get in it, the larger profits you can have. Because what's being presented here is just the most basic form, letting the numbers play. This is a spot where you can tell a computer, just with these little calculations, don't do it until it's commanded. If ratio is greater than 6520, do this. Oh, it's at 6310. No, it's not, the computer says. Oh, 6920. Oh, ratio says it's greater. I got to do what I'm told to do in the script. And that to me is what this is all about. Thank you for tuning in. Bye-bye.